why a stock market crash is good for the economy and why we need one. Now, you could argue that the stock market is extremely outrageously overvalued right now. You could also make the argument that the potential overvaluation can continue on for a lot longer than people think, which is also true in my opinion. So what we have, and I saw a post on LinkedIn, is we have basically 7 companies, 7 of the top AI/artificial intelligence companies that are trading among themselves, essentially. So what they're doing is they're taking $1 million here. It's, and this guy on LinkedIn compared it to the Three Stooges. He said, hey, I'm going to give, what are the guys' names from the Three Stooges? I forget, but he was using the example of giving Larry $1 million and then Paul $1 million or whatever. So it's like they're just handing out money back and forth to each other, and they're kind of expecting that to solve the problem in terms of growing this AI infrastructure. Meanwhile, the cost of doing so is outrageous. We've already heard about how much it costs to get the compute, the power, I guess, that you need. They're also using a lot of water, a lot of natural resources, and all of this is very, very expensive. So, with that being said, most of these companies are not going to survive. It's just like the dot-com bubble. You're going to have some survivors, but right now, there's a lot of misallocation of resources, and there is a lot of just mismanagement all around. The amount of money, I think Meta is a perfect example, actually. If you look at Meta, their stock just fell, I think it was 20% in the past month or so because of all the AI spend, because of the fact that they're spending way too much, and investors are starting to ask the question, maybe not quick enough, but they're starting to ask the question, how long can this continue before I get a return on my investment? They're not just going to continue to hand out money left and right forever. So when it comes to the AI infrastructure that's been built and trying to, sell it to the general public, first of all, a lot of people are very weary of AI, especially as the job losses continue. I don't know about you, but I use AI, but I'm not like a fanatic about it. I'm not going to, use it in everything. There's some practical applications, but when you really think about what AI does, sure, it's kind of cool, but what are we really doing? We're basically scraping the web for information that's already out there. It's no different than, if you remember back in 2017, it's just a little bit more advanced now with the AI overview. They've made some improvements, but if you go to Google, you used to be able to type in, see a bunch of tabs and choose the question that's most relevant to your question. So when I say this, people look at, say, AI, artificial intelligence, and they think it's just this revolutionary thing. Well, AI has been around for a very long time, and companies are using this as an excuse while making record profits to lay off people. So depending on who you ask, you're going to get a number of opinions. This is just what's happening. This is what I'm seeing. So in the midst of all this, you have a lot of layoffs going on, you have record profits, and you have the 7 top AI companies basically handing money back and forth to each other. It's, I don't know what you can compare it to. It's basically just, the one guy I was following on LinkedIn, he posted it, and he basically compared it to the Three Stooges handing money to each other and getting really no long-term benefit. The only benefit is that in the short term, it provides liquidity for these companies to continue investing in AI. And I'm not saying they're not making legitimate investments into AI. I'm just saying the amount of money they're spending is ridiculous. And most of this stock market wealth is concentrated within these companies. So if you're not one of those, big boy, shareholders where you caught NVIDIA super early, back in 2015 or 2017, I guess 2019 as well would have been a very good buy. It had already gone parabolic by 2020 and then came back down in 2021, 2022. Palantir's another one. That one, we talked about that one on the channel when it was under $10. But, I don't even think Palantir is part of that group, in terms of the top 7 AI companies. So you have Alphabet, Google, /Google, you have Microsoft, you have Amazon, you have OpenAI, then you have, Anthropic. So there's a couple more that I'm missing. But yes, that's basically what's happening. So when you think about this, These are all considerations or points of consideration. So I would say, going forward, you need to be careful what you're investing in at these valuations. I mean, NVIDIA just hit a $5 trillion market cap. And to me, that's just, I mean, 5 trillion, why? Why is it worth 5 trillion? We need to ask these questions. Is the technology that valuable? I know there's a shortage of chips. I know that people and these companies cannot get access to enough chips. And so if NVIDIA is like the pick and shovel salesman of the AI gold rush, then, I mean, what are these other companies? These other companies are just feeding off NVIDIA. So it's, like I said, it's just basically going in a circle. These companies are handing money left and right to each other to prop up their stock prices and to do everything that they can to create the illusion of, very sound investments. What do you guys think of all this? I mean, in my opinion, this is not going to last forever. Most people, even Bill Gates was interviewed recently saying it's comparable to the dot-com bubble. He was discussing that. And we've discussed this for a while. But like I said, these things can continue on a lot longer than people can imagine. The problem is that people get sucked in at the very end of the bubble because they get FOMO, because they get the fear of missing out. And when they get the fear of missing out, what happens? Well, typically it does not end well. So you need to be careful if you're an investor, because if you're looking at small caps, it might be a different story. I'm still bullish on a lot of small cap stocks. I think they've been tremendously undervalued. Like I said, most of the gains have been concentrated in these top AI companies. So there's a lot of companies out there that are not participating in these major runs that are happening. And in my opinion, that's your opportunity right now, is to do research on some small caps, on even some micro cap stocks. I invest in all those stocks. I have a high propensity to risk. I always have. I'm still considered at the age where I can take risk, and I can take significant risk, because if you think about the retirement age being 60, maybe even when I'm older, it might be like 65 or 70, right? For a Roth IRA to take the money out. I'm just going to take as much risk as I can right now and try to grow the Roth IRA, because I'm okay with that based upon my risk tolerance and investing goals. But especially, I would say, be careful if you're investing in these AI companies that have already grown to several $1 trillion in market cap. I mean, you've already missed the boat, guys. I'm sorry. And I said that when NVIDIA was at 130, 150, but there's no telling how high these things will go up. If we're talking NVIDIA at a $20 trillion market cap, what does that mean for the US GDP? What does that mean for the US national debt? I mean, we're talking one company could be equal to half of the, national debt. I mean, maybe by that point it's a lot more, but it's just crazy, in my opinion. And there's no way this is going to continue. It's getting way out of proportion. But in the meantime, they just keep on going up. There seems to be no end in sight. And the interesting part is going to be here also with the Fed interest rate cuts, because as the Fed cuts interest rates, as the Fed provides more liquidity to the market, where will all that money go? Will it really be concentrated in these mega cap corporations, these mega tech AI companies, after they've already gone on these massive runs? Is that even possible? Or will there be a significant retracement and a significant decoupling of these companies? Now, to finish off, why do I believe, and to make the point, why do I believe that a stock market crash is good? Well, as I've been mentioning throughout this video, most of this stock market wealth is concentrated in these AI companies that are extremely overvalued, in my personal opinion. So, and you could have made that argument last year or whatever, but most of these AI companies are way overvalued. They are way over the top in terms of the revenue, the expenses. It just does not add up. So there's a lot of malinvestment going on right now. And this malinvestment needs to be corrected. So the only way to correct it is to make these asset prices go down to more reasonable levels, unfortunately. And there might be a lot of pain as well with this type of bubble. There's already pain with layoffs, but these companies are posting record profits. So I don't know what the solution is. All I know is that there needs to be a significant retracement in these major tech AI companies, specifically a stock market crash for these AI tech companies, because it's just getting out of control, guys. It really is. And I just don't see any path forward in terms of, if you're looking at a company like NVIDIA, it's already at 5 trillion. That means as an investor, you want it to be worth 10 trillion. It's just not sustainable. So the sooner we get rid of all this malinvestment, the sooner we get these asset prices to come down significantly and get the pain out of the way. And so as these asset prices come down, it's going to become easier for the average Joe investor to get invested in these assets as well. So it's going to, benefit everybody. Now, there might be some short-term pain if you're exclusively invested in these top AI companies and you don't have any small caps or mid caps or other types of companies that may be actually still undervalued. But if you're invested in these top AI companies through an index fund or whatever, you might see some downside. And there might be a lot of downside in small caps as well if this thing really takes down the stock market and everything else because of how overinflated it is, right? So just remember, somebody who's buying NVIDIA at $5 trillion wants a $10 trillion plus valuation. So that's where we're at, guys. That's where we're at. So I don't really see a path forward except for a major crash in these AI companies eventually. And with that, it could bring down a lot of companies with it. But that's also going to be good to get rid of a lot of the malinvestment. And it's going to be good for the average Joe who's looking to add a position to some of these highly inflated AI tech companies. A stock market crash is a good thing. Asset prices cannot go up forever. And we need to see some type of correction, not just a correction, but maybe even a bear market. Because like the last bear market we had in 2022, they wouldn't even call it a recession. I mean, even though there was 2 declining quarters of GDP, that is the technical definition of a recession. But of course it gets political. So that's the thing. I just feel like we need to get some of this out of the way, go through the pain. But anyway, guys, thank you so much for tuning in. That concludes our video today. Get outside if you can. It's a nice day out, especially if you're in the Midwest or the northern states as it gets colder. I'm taking advantage of this nice weather as much as I can. So anyway, thank you all for tuning in, and we will see you in the next one.